Today, we are cracking open a trading classic, Steve Nissen's Japanese Candlestick Charting Techniques. This is literally the book that brought this incredibly powerful, centuries-old tool from Japanese rice traders and dropped it right onto the screens of modern investors. So, let's dive in. You know the feeling, right? Every trader's been there. You see a signal from your favorite indicator, you jump into a trade, and then the market just turns around and goes completely against you. It is so frustrating, and it can be expensive. So, what's the deal? What are we missing on our charts?
And that really gets us to the heart of the problem that Steve Nissen's work helps to solve. It's all about that gap between what your technical indicators are saying and what the price is actually doing. I mean, think about it. An oscillator crosses into the buy zone, a moving average points up, so you enter the trade feeling pretty good about it, but then, nothing. The price just hangs there and reverses. Why? Well, it's because most indicators are lagging. They're just doing math on what's already happened. They can't show you the real-time battle happening right now between buyers and sellers. And that battle, well, that's where the real story is.
But what if you could actually see that story? What if you could watch it unfold right on your chart? This, right here, is the revolution Steve Nissen kicked off. He basically introduced the Western world to a visual language that makes market psychology completely visible.
I mean, it's kind of crazy to think about, but before Nissen published his work back in the late 80s and early 90s, almost nobody outside of Japan knew what candlesticks were. He's the guy who did the hard work, digging through the research and translating these ancient techniques for our modern financial world.
And the difference is just night and day. A standard line chart, yeah, it's just connecting the dots of closing prices. It's simple, but it hides all the action, all the drama. A candlestick chart, on the other hand, gives you everything. The open, the high, the low, and the close. You get the whole story of the fight for that session.
So how do we read this story? It's actually super simple. That thick part, that's the body. It tells you where the price opened and where it closed. If it's green, it closed higher. If it's red, it closed lower. Easy enough. And those thin lines sticking out, we call those wicks, and they show you the highest high and the lowest low the price hit during that time. In just one glance, you can see who won the battle, the buyers or the sellers, and you can see how intense that fight really was.
Now, Nissen's book isn't just some big dictionary of patterns you have to memorize. No, it's a whole new way of thinking, and it's built on 3 core principles. Let's break those down.
Okay, principle number 1, and this is the big one. Psychology is more important than indicators. A candlestick is a direct picture of human emotion. Think about it. A candle with a really long lower wick at a key support level, we call that a hammer. You can literally see the buyer stepping in and fighting back against lower prices, all in real time. It's not a calculation, it's immediate market sentiment.
This is so important. A pattern by itself means absolutely nothing. You see a doji candle, that's one with a tiny little body showing indecision. If that shows up in the middle of some choppy sideways mess, it means nothing. But if that exact same doji shows up after a huge run-up right at a major resistance level, whoa, that is a massive warning sign that the trend might be running out of gas. Context is absolutely everything.
And this really gets to the heart of what Nissen was teaching. He never ever said to throw away all your old tools. Just the opposite. He taught that you combine the two, the Eastern candles and the Western technicals, to get a way more powerful result. So a bullish engulfing pattern, that's cool on its own. But a bullish engulfing pattern that happens right on the 200-day moving average, now that is a high probability setup you should pay attention to.
And Nissen himself just summed it up perfectly with this quote. Candlesticks aren't some magic system that's going to make you rich overnight. They're a tool, a powerful lens that adds an incredible amount of clarity to the things you're probably already using, like trend lines, volume, and support and resistance.
All right, so knowing these principles is a huge step, but the next step is knowing how to avoid the really common traps that almost every new trader falls into when they first discover candlesticks.
First off, newbies get super excited and they try to trade every single pattern they learn about. Nissen says this is a huge mistake. You'll just overtrade yourself into the ground. Second, they see a pattern form and they jump right in, without waiting for the next candle or another indicator to confirm the signal. And third, and this is a big one, they get so focused on the pretty patterns that they forget the basics. You always have to use a stop loss because no pattern works 100% of the time.
So, look, when you put all of this together, you get a completely new edge. You stop looking at charts as just a bunch of lines and numbers, and you start seeing them for what they really are. A living, breathing story of human fear and greed.
And in this, right here, is the ultimate takeaway.
One powerful reversal candle, right at a key turning point, can be your earliest warning that the entire market mood is about to shift, way before your lagging indicators have any idea what's going on. Learning to see those moments, that's what makes all the difference.
So that brings us to the final question, really. After you start to understand Nissen's work, it's pretty clear there's a much deeper level to all of this. The charts are telling the story every minute of every day. The only real question is, have you learned the language to read it?